Hello guys, and welcome to another episode of Slow Life Trading. Anyway, I got a good episode for you guys today. Today is VIX Day, and I wanted y'all to see this thing live, how this market moves, and the reason why we don't trade on these days. So first of all, I want to tell you that it's about 5 minutes to 1 o'clock, and at 12:52, I got in the market is at 38.45, and it was at 38.45, 3 minutes ago. And I got into the 4,050 call spread for 55 cents. Right now it's going for 45 cents. I want y'all to see, it's ridiculous that it let me get, with 2 hours ago, that it let me get over 100 points, like 150 points away from the current price, okay? Which almost make me want to put the trade on, but you can never tell. And then on the put side, I put in the 37.05, 36.55, which is over like 110 points away. Not quite. 100 and, I don't know, close to 150. I have to figure it up later. And I got it for 65 cents, as you can see right there. And right now it's going for 78 cents. So, and you can see it's been a little bit of a choppy day today, okay? And I want y'all to hear what they have to say. And then also I want you to see this price movement of this, the stock price today of the SPX. Because that's such a wide price, guys. It almost makes me want to trade it. In fact, I do want to trade it. I'm just not going to do it. Have to have a little bit more discipline than that. But I don't believe it's going to move 150 points, okay, in the next 2 hours. So it's already at 1 o'clock, 2 o'clock, 3 o'clock. You know, the market closes at 3 o'clock Mexico time, or 3 o'clock Central Standard Time. So anyway, I just don't believe it. So I'm here with you guys, and I'm gonna sit here and talk with you guys for the next 3.5 minutes, 2.5 minutes, until they come out with what this thing, until the Fed comes out. The cool thing about this is that we know he's gonna come out and speak at 1 o'clock. And if it's not 1 o'clock, it's gonna be a few minutes after. So that's the good part about it. But I'm excited here to show you guys this 2022 market. Here the last, since October, we'll just say the last half of September, but really just October, okay? And really the second half of October. October has been a crazy month. Well, the whole month of October, really. It's been a crazy month. And part of the reason why it's been so crazy is because the Fed has been raising now for like 3 times in a row, 75 basis points. And I know you guys are probably tired of hearing me talking about the Fed. But just like y'all are tired of hearing me talk about the Fed, I'm tired of the Fed talking. I'm tired of this sucker. He's messing with my mojo. Okay? So anyway, I want y'all to see, because we haven't been through this in somewhere between 8 to 12 years where the Fed has been raising interest rates. And I can't remember a time where he raised it 75 basis points this many times in a row. This is crazy. Interest rates on houses has went from somewhere at the beginning of the year to like 3 and 4% to now 7, 7.5%, 8%. Okay, and that's with good credit. If you buy a house, we don't even want to talk about what it is on a credit card. Okay, so much for that. Let me get to the point here. It is 12:59. So we finna flip it back over, get to let you guys see what's going on here. I'm gonna let them talk, and I'm gonna shut up.
That is not necessarily followed by some sort of pause. You know, a 50 basis point rate hike is still a very aggressive rate hike by any means. And so we are continuing to see them tightening. We are well into restrictive territory. We've seen...
They're gonna keep on talking about this over and over.
And they are continuing.
I'm gonna let them talk in the background. They're gonna continue to talk about this, and they're gonna talk loud, of course. And but we just gonna wait them out and wait to see how this thing moves, because I'm telling you, it's going to move. Okay, Oh, there we go.
I think
Here
we're
we go.
starting to
Look at
see.
that, guys. You see that big long line right there? And look at it dropping down big. I want y'all to see this. And this is like 8 seconds.
Tyler, a 75 basis point increase by the Federal Reserve, bringing the target range for the Fed's benchmark interest rate to 3 3/4 to 4%. The decision for a fourth consecutive 75 basis point increase was unanimous, but the statement does add a new flexibility on the pace of future rate increases. The Fed now says that it must pursue monetary policy that is, in its words, sufficiently restrictive to return inflation to its 2% target over time. The Fed now says that in determining the future path for interest rates, it will consider what it calls the cumulative tightening of monetary policy and also the lags between its monetary policy actions and their impact on inflation and overall economic activity, acknowledging that there is a lag between the actions that it's taken to date and the impact that they've had on the economy so far, raising new questions about at what point the Fed could perhaps evaluate the impact of those actions and at what point they'll be fully baked in. Back to you.
All right, Kayla, thanks very much. We appreciate that.
Yeah, let's bring in our panel as we do see stock averages pair the losses. The S&P has turned positive. It's up 15 points right now, 38.72. The Dow has just jumped 270 points. The NASDAQ and the NASDAQ 100 have turned positive as well. We're seeing yields come off in the Treasury market as well. The 10-year is hanging on to 4%, though just barely. Let's bring in our panel. Let's all bring our panel back in. Let's also add Steve Leisman, Bob Pisani, and Rick Santelli to the conversation. Steve, let's start with you and that change in language that Kayla just laid out.
Yeah, Kayla certainly highlighted the most important part right there, and it looks like there's two pieces to it. The first one here, in determining the pace of future increases in the target range, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity, inflation, and economic developments. So the first part, the part I didn't read, is they want to make sure it's sufficiently restrictive to return policy. So that tells you maybe they have more work to do. But the idea that maybe they're taking into account lags tells you maybe they're going to go slower here. I don't think I would mistake this for saying the Fed is ready to pause. I think it's something that you might digest and say the Fed is aware that it's done an awful lot and doesn't feel it has to do quite as much as it had done in the past. I'm going to take a quick look while I'm talking here at what's happened to Fed Fund futures, and they've come down a little bit. We'll see if that holds, but that May contract was trading at 503 for a high for a peak funds rate. Now it's at 496. So not much of a change, but a little bit of coming off there. The market still is reading this, at least in the initial minutes after the statement came out, as believing the Fed has still considerable work that it will be doing. So maybe a slower pace, but I'm not seeing necessarily a lower peak.
Yeah, and yet it seems to be a slightly different story where equities are concerned right now, Bob Pisani. You got the Dow jumping to a 1% gain now. You got the S&P up 0.75%. The NASDAQ also moving higher, markedly higher as well. I mean, when you look at the equity markets, was it just spring-loaded for any teeny tiny sign, any little bit of hope that anything could be even the slightest bit more dovish than what we have seen previously?
Okay, guys, I'll tell you this. This is crazy. Okay, remember I told you we got in these things at 12:58? It is now 104, and that put price, it went from, let me see here, 55 cents when I got in. Now it's trading for 45 cents. So you didn't make that much on that side that quick. And then on the put side, it went from 65 cents to 23 cents, okay? Which is roughly 25 cents. It only trades in 5 cents increments. But look how much the price moved. Each bar over here is worth $5. So that thing moved from under 38.45 all the way to up to close to 38.90, which is about 45 points. And each bar here represents 2 minutes. Look at that long bar that happened in 1 2-minute period of time. Although, like I said, I still believe that these strike prices that we got are gonna win, okay, and probably expire worthless. I'm gonna come back with you on that and let you know how it turned out. But This is the reason why if I do trade it, I won't get in early and trade it, okay? Because even though it looks like even getting in early, this thing still will win. But anyway, I'm gonna come back to you later and let you see how this thing closes out today.